Well, hi everyone. Welcome to the Buff and Beyond Research Stock of the Week, and we are going over Altria with that stock symbol MO, and Altria was known as the Mighty Mo at one time, and it's more than doubling the S&P 500 over the past 5 years. And notice the name, Altria Group Distribution Company. So it's more than smoking anymore, and it has to adapt to the times, and folks, it is. Now remember, if you want to walk on this beach like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. And let us look at Altria and take a look at this company. It's the parent company of Philip Morris. Remember Philip Morris, USA? Well, back in 2024, the company operated two segments. And we'll tell you about the split off here in a moment. But right now, it's operating in two segments. One is smokable products, 88% of total revenues. That's pretty amazing that there's still a lot of people out there smoking. And includes Marlboro, Parliament, Virginia Slims, and oral tobacco is 12%. And it sold the wine business in 1021. Now, their smokable products are also considered the vaping. So you have to be careful here how you read this and where the official definition of vaping lies. It's certainly not an oral tobacco, and it's certainly not smoking, but it sort of is smoking. It's smokeless smoking. So anyway, it sold the wine business in 1021, and it has a 10% interest in Anheuser-Busch because it likes the beer business. Very, very nice markup there. And it spun off into Philip Morris International in 3/08. So that's March of 2008. And why did it spin off? Because remember, back then, well, if you do remember, a lot of lawsuits against the companies for advertising or how it was advertising to kids and getting kids dependent on smoking at a very early age. And so what it did is it split off two companies. One is the Philip Morris International, and the other is Altria, which is the old Philip Morris, but USA. So that's what happened way back when. Has 5,900 employees. Now, that's not counting Philip Morris International. This is just Altria here in the US of A. And Altria has contained its efforts to pivot from traditional cigarettes, so this is the business end of it, to reduced risk products following regulatory pressures, which we just mentioned, and declining cigarette sales over decades due to the health risks associated with smoking. So tobacco company Altria beat Wall Street, and this just the other day, beat Wall Street's revenues with sales up 20%, 20.1% year over year, and its profit of $1.32 per share was 5.9% above analysts' consensus estimates. That's pretty good, folks, and that's why it shot up, and we'll see that on our chart. Now, a company's performance, and this is for any company, is influenced by its brand strength, and that's what Buffett likes, and I don't know if he likes Altria or Philip Morris International, but we're talking about brand strength. You're looking at the Coca-Cola, you're looking at Philip Morris, you're looking at some of the beer companies, and it's marketing strategies. How does he get that point across? In other words, does Coca-Cola or Pepsi going to have advertisements in the Super Bowl next year? So it's that kind of thing. And shifts in consumer preferences, because people are certainly getting away from smoking cigarettes, the traditional smoking of cigarettes, but they're getting into vaping. So you have to prepare for that shift in consumer preferences. Now, changing consumption patterns are particularly relevant and can be seen in the rise of cannabis. Yeah, you can even eat that stuff now. Craft beer, that's why they're still in the beer business, and vaping, or the steady decline of soda and cigarettes. I didn't know there was a decline in soda, but I guess there is. Now, companies that spend on, and this is very important, companies that spend on innovation to meet consumers where they are with regards to trends can recap huge demand benefits, while those who ignore the trends can see stagnant volumes. Now, I want to mention this part here. Spend on innovation And folks, let me tell you, there is an 88% profit on this company's goods sold. So in other words, the goods that this company makes, it has an 88% profit. Folks, that's better than the semiconductor business. So we can spend on innovation. Yeah, for every dollar that it sells, it makes 88 cents. So that's why I'm circling the spend on innovation, because they certainly have the cash to do that. And let us look at this, because this is why they have cash. They have this net income over here, and we're projecting out to 2027. Dividends paid, 4.52. Now, this is why this stock is in our dividend growth and income portfolio, because, folks, at the beginning of this year, it was paying a 7% dividend, and we've had it in our dividend growth and income portfolio, boy, for as long as I can remember. And it's paid as much as 8.2% at the beginning of a year when we rebalance these stocks at the end of every year, just like we do the growth portfolio. So you're looking at a really, really nice dividend. It's growing at 4.2% per year on average, going to grow at 4.6% for 2027, which is nice. So you're getting a nice high dividend, and it's growing close to 5% in some cases here. Let's call it 4.5%. So we look at the clean surplus return on equity, and we can see that it is actually growing. Now, it's not the 20% that we require for our growth portfolio, because usually a company that has a high dividend doesn't have a high clean surplus return on equity. They do. Philip Morris does with that stock symbol PN. So Philip Morris has a nice high clean surplus return on equity. Our pipeline companies have nice high return on equity. But let's get back to this net income and the dividends paid. The net income determines how much money is going to be paid in dividends, and how safe is that dividend. And this is one thing that Buffett looks at. How safe is that dividend when he starts talking about starting to get into stocks that are going to benefit you at retirement, because you're getting it at, in this case, if you got it in the beginning of the year along with us, you were getting a 7% return. And you're getting a 4.6% return for next year, 3.8% dividend growth I'm talking about for this year. And so we have to look at that dividend growth, and where is that starting from? So this is starting at a nice high place. Remember what Buffett always says about Coca-Cola, that even though he bought Coke 60 years ago, if you can believe that, but 60 years ago, but he gets more in quarterly dividend payments now than he paid for his entire Coca-Cola position 60 years ago. So that's saying something. That's what you look forward to when you start building that growth, dividend growth and income portfolio for your retirement, even if you're young. So you got to think about that a little bit, folks. Now, what I want to come back to here is that this dividends paid, or the net income, is about 1.25% higher than the dividends paid. So there's about a 25% difference that it can use from its net income to keep that dividend payment growing. So that's one thing that you look at, is that net income sustainable? And boy, oh boy, look at this net income just rising every year. And the dividends are rising every year to go along with their net income rising. And folks, this is going on for as long as I can remember. I've had Altria for a long time. And no, I've never smoked a cigarette. So this is not in my portfolio because I smoke. I don't smoke. I don't vape. So I don't use any of their products except maybe the beer. But it's sold off the wine, and I'll drink wine every now and then. But no, I don't use any of their products, but people do, and you can see that in the rising net income and the rising clean surplus return on equity, which means they're making a better profit than they used to back here on the products that they sell. And because of vaping, and people think of it as smoking, there's a very, very high markup on vaping. Yeah, I looked into this a lot, folks, especially when vaping came along. Is there a profit in vaping? And yeah, people consider it smoking. Big profit on tobacco products, bigger profit on the vaping products. Very, very nice. So let's look what this stock has done in the past 5 years. And here's a chart. Black line is the S&P 500 over 5 years, up about 71%. And Mo, or Altria, the mighty Mo, up 126%. This does not include dividends, so you can take another 35% on top of this to give you 170 something percent over the 70% of the S&P 500. So not only are we getting a stock that's growing faster than the average stock, it is also paying about 3 times, 4 times that dividend of the average stock. So we've got a double header going on in here, folks, with this Philip Morris. And how did it do in the past year? Black line's the S&P 500, up 4.6%. And this stock is up 27.39%, not counting the dividend. And you can see that because it came out with better than expected earnings, how it really shot up just the other day as I'm recording this. So we're looking at the end of April for this stock shooting up very, very nice and adding to our portfolio. Folks, we love it. So, folks, remember what our goal is. Build your wealth faster and safer. Yes, Altria is considered a very, very safe stock because of its rising income, and that income is considered very, very safe because of where it comes from, and that dividend is considered very, very safe because the income or the profit of Altria is 1.25 times or 25% higher than the dividend that it pays out. So it's considered a very, very safe dividend. So, folks, we had a pretty good week this week, and it looks like the market may be rolling over a little bit in here with the top stocks in the semiconductors and the cloud business and the tech business kind of out of the way, except for just a couple of stocks out there that remain. But most of the S&P 500 has given its dividends and future forecasts, and the market seems to like it, but it already anticipated all of that, and so it might be rolling over to give us a little reversion to the mean and take a little time off here because we had a beautiful rise a couple of weeks ago that is just starting to stall out now. But we've had a great, great month, folks, and some stocks are setting new records as we speak. So you go out. We had a good week. We had a great month. So go out, take your mind off the market, be with your loved ones, take some time with them. And folks, most of all, be safe, be healthy, and we'll see you back here in a couple of days.